Hey, what's up, everybody? All right, this is Chef, and today we're just going to talk about a little bit of the updates on the market and the way things are moving and what to look out for and things, right? So I'm just going to give you guys a little bit of my thought process and my perspective. Totally up to you how you take it and want to receive this, whether you want to take and do your own due diligence, by all means, please do, because that's kind of our purpose is to understand the markets while ourselves doing our own due diligence, right? It's knowing and understanding like what we're getting ourselves into, whether it's a scalp trade, a day trade, a swing trade, a long-term position, or whatever it may be. You want to understand fully the bigger picture and your initial investment as to what it is, right? Whether you're in the trade for like 5 minutes or 5 days or 5 years, you yourself, you always want to understand. But anyways, let's make that clear, right? Let's just talk about the market, guys, right? So I'm going to point out a few things here. As you guys can see, this huge watch list that I have. I'm not going to go through everything, but I'm going to talk about the dollar, oil, gold, and the futures right here, the four futures, and then a little bit of the financials and different sectors, right? Everything that I'm going to give you is based on the charts. And again, it's just the perspective that I have and the way that I view it based on the charts themselves. All right. So here's the market, right? Let's talk about this market. Here was your COVID drop, okay? Here was your COVID reaction. This is the results, right? And then this happened, and then this was all war and inflation and recession, all of it within 1 year, okay? So the reaction of COVID happened. The results were this. The reaction of war and inflation was this, okay? Basically, what I'm pointing out is that what happens in this market is that you're always going to get the initial reaction. How long will it last? Who knows? Sometimes it lasts 15 minutes. Sometimes it lasts 3 days. Sometimes it lasts 3 months, or sometimes it can be a full year. Okay. So it's all about like when will it subside and when will it start to change and come back and stabilize into the normal value of where it should be. Okay. So now that we have the market here on the weekly, so this is the weekly time frame, guys. All right, just remember that. We're heading into this new year, and so far we've been trending up right here, and we've been from 38. I'm just gonna say 38, and we're already at 42. The question here is: are we bullish? Are we bearish? Are we in a recession? Are we facing inflation still? The answer is who knows. Okay, we are not the ones who are looking at data. And we are not the ones who are deciding where the data is going to be. The data comes from the economical events, which you guys should be looking at with the Forex calendars, and be aware of what the numbers are looking like, whether they're bad, whether they're good. It's going to depend, and it's going to change every single time. Last year, while we heading down into these levels down here, it started to cool off. And down here, a lot of the buyers started showing up. And then once we hit this like 35 level, we haven't stopped trending ever since. Okay. So again, make sure you guys do your own DD on the data and the numbers, right? I want to point out something huge right here. This is the trend that everybody was looking at. And so far, the market has been bullish. Okay. Whether it's short term or we're going to continue and we're going to hit 48 by the end of the year, who knows? I'm not sitting here telling you guys that we're going to be at 48, and I'm not sitting here telling you that we're going to be at 36 or 35. What I care about is this specific trend that's happening here right now at this moment. Why are we trending up? Now, most people are going to tell you that we're still facing recession. We're still facing inflation. Yes, all that is true. Okay. But does it mean that we have to react to that? Does it mean that the reaction is done all from last year? We don't know that. All we do know is that the reaction here for the reversal in the market is still bullish and it's pointing upwards, okay? The setup here, what's happening here with the market is basing out on the weekly time frame, which is really good. I've mentioned this in the past before to you guys that what we would look for is a break above or retest, which we got here, okay? And there's your break above, there's your retracement right here, and this is your hold, right? So now you have this base at 41 to about 41.50, that once we start trading above 41.50, we're going to easily break that 42 and head in to this level right here as a target, because that's what naturally happens when you have trend lines. anytime you have a trend line and it breaks, right? So here's this. This is how it naturally goes. Usually when you have a trend line that breaks here, in the stock market as a day trader, you want to be able to take profit at that next top. So basically here. And then from there, you go into that next one. So this would be the next target. And then once we break that one, you would target this. And then naturally, you would want to target that top, okay? This is how it works in the intraday trades when you break up a trend line. Now, this is the bigger picture. Yes. Do the same rules apply? Of course. Okay. Again, this can fail here, and we get a catalyst that next thing you know, we have a failed breakout, and the continuation just drops all the way back down. It can definitely come back down and test this trend line again if they wanted to. Okay. So it's the same results no matter how you look at it. Okay. But I want to point out the fact that we've already seen a lot of volatility. And by that, I want to point out the VIX. All right. There's a lot of people out there still charting the VIX. Okay. I don't know how long you guys have been trading, but fear cannot be charted. Okay. Can this be considered support to many traders? Yes. Okay. Is it support? By no means. Okay. What happens is a fear gauge, a gauge of contracts that are being traded in the stock market, whether you have puts or calls, mainly puts, right? And that's what fear is. Fear causes volatility. Volatility causes a sell-off in the market. Has that happened? No. Some people can tell you that this is support and we can go all the way back up into this 85.47. The only way that would happen is if we get this new catalyst in the economical aspect, meaning that there could be a war with China. Maybe we get involved in the war with Russia and Ukraine. Something crazy happens. Somebody blows up the oil rigs or something or whatever. I don't know, but it has to be brand new. Okay. Otherwise, there hasn't been anything brand new anymore. All that's been happening is the increase in rates and the potential increase of more rates coming. But that's just potential talk. There is no actual fear in the markets. But I do want you to be aware, though, that because we are at these levels down here, it does mean to be aware of new catalysts incoming. Okay. No specific number here. Just as long as we're below 25, the gauge is still okay. There is no fear. Once we start hitting 25, 30, 35, then be a little skeptical, and you should have been in puts by then. Okay. But that's, of course, if the market is breaking structure. But as of right now, based on the weekly time frame, we're still rocking and rolling to the upside. Okay. No matter how you want to see it, whether you want to be bearish and graph puts here and your stop loss is at 42, great trade. Just make sure you respect your stop loss. All right. So again, pointing out the fact that a lot of the fear and a lot of the reaction is already done from the previous year. It already happened. Okay. Now, whether or not we push up or push down, we're just going to take it day by day, guys. And remember that the trend right now, short term, is still bullish. Okay. Until that changes and we start breaking 41 and 4K, then go ahead and make sure you're rocking and rolling on those puts, right? Let's go look at the NQ, right? So let's go look at tech. If you guys don't know, a lot of tech names with after earnings, a lot of them have been pushing up, right? So again, let's point out the trend line that was here in the past that it finally broke, it pushed above, and it's been green ever since. So the trend is your friend still, so have no fear, right? Keep playing those dip buys, keep playing those breakouts to the upside. There's nothing that's really changed that's going to point to the downside just yet. As long as the VIX is down, as long as the volatility is down, and no selling pressure walks into this market, then everything is still fine. Okay. Again, this is the levels where you should be bullish or bearish right here. There you go. See this candle, this big candle, this green one right here? So you want to grab that top of that and make sure that we stay above it in order to be considered a breakout. And you want to be on the bottom of this to be considered bearish. Until then, consider everything still a bullish play to the upside. And then the same scenario, like I said earlier, right? Once you break a trend line, your target becomes this, and then your second target becomes that, and then your target is this, and then this top one here. Okay, those are the rules of a trend line break intraday, and there's no difference from a bigger time frame. The only difference here is that it's just going to take a lot longer to develop. Okay, so lots more patience on these plays. Let's go look at RTY. Okay, RTY has the characteristics of going sideways a lot. If you don't know what these are, this is the small cap. This is the Russell 2000 index, and it carries a lot of small caps. It has some financials. It has some, even has AMC under it, I believe, and some healthcare. What I want to point out here, that the major thing here, okay, look at this, all right? So I'm gonna give you guys everything so you guys can see visually like what I'm talking about and the characteristics of these ranges, okay? Look where we retested, all right? I want you to see something, all right? These were the previous tops before COVID and everything, okay? This is where we bounced from. This is the range that we created, okay? So we created a range right on top of that COVID and the previous highs over here, that 17 and 1740. Now look where we're at. We're rocking and rolling from the beginning of the year, and we're actually trending upwards, all right? So once we go back inside the range, then we're going to chill inside this range. And until we break down below, then we're still bullish overall in the small caps. A lot of them are still holding. A lot of them are still trending. If you guys take a look at IBM, it's a name that's trending as well, right? I'm not telling you guys that AMC is going to go to the moon, all right, because every ticker varies. But definitely consider the fact that a lot of the small caps have been holding range here, and they built an accumulation, and now we're trending to the upside. Yes, we haven't broken over that like that 2K or the 21. That's fine. But as long as we're over the accumulation phases in general on the bigger time frames, then your market is still doing okay. All right. So just want to point that out as well. And just so you can see the characteristics of this. So the other one would be the Dow. Okay. Look at this. All right. It's like nothing ever happened the previous year, right? We went from 36, 832 down to this basically, what is this, 2880? Or let's just say 29. And then now we're back up at like 34. Almost like nothing ever happened. And the Dow Jones is kind of squeezing right here, as you can see. Just kind of squeezing in here. Sorry, not trying to do these cricket lines, but here you go. We're kind of consolidating here in the Dow. This is going to be your leading indicator if the market decides to drop. As you can see, I have my alert right here at this 33. Once we start going below 33, then I'll be concerned with the market in general dropping down a bit, because the Dow holds a lot of weight in the market. A lot of investors like to look at the Dow for, you know, potential direction in the short-term future. And this, as you can see, we've been consolidating all year, and it's okay. After a hectic year last year, a lot of names in the market are still adjusting. Some are still dropping, some are still trending up, some are consolidating, and you know, it's just showing a lot of value. Basically, what I'm saying is that the value in general is stabilizing across all the futures and ETFs, right? And a lot of it is bringing back its normal trend. Normal trend because no new catalyst is here, no major fear is around, and the charts are showing the potential reversal to the upside in general, okay? So that's the Dow. I want to point out another thing. A lot of people look at gold. Gold has been something that was a safe asset in the past, okay? Look at from the bottom right here, the 1650, okay? All last year we trended up and we made this like double top, I guess you can say. So this was last year, the reaction of the war. So gold actually ran and then it cooled off. So basically, while this cooled off and the market dropped, gold was not considered as a safe asset. So it was no longer in that aspect being used. So what's happening now is that it bounced at a normal level, came into the end of the year with closing right here in the green, towards the end, of course, and started off the new year green, and then now it's pulling back on the weekly time frame. What's happening here with gold is actually creating a bigger range, as you can see right here. This is your bigger range for gold, and now it's finding its true value, and it's stabilized after all that craziness happened. So even with COVID, even with the war, gold is still just stabilized. So it's not really moving with or against the market. It's just doing its own thing. Okay. So the reaction of it is basically done. The other big one is the oil. Okay. This is where a lot of people say that oil is going to go freaking crazy and, things are just going to get bad. This last year basically ran all the way to that 130, and that's when the war happened. Once that happened, I did talk about right here about we're going to see a reversal from this doji, and that reversal happened. And I said, I'm going to look for a dip by around this 80 level. Okay, that's where I personally would find the most value, because in general, I think oil has a great spot between 80 and 70, and it's a great buy area for me. Why? Because the catalyst is already done. The volatility of it is already done. It was basically a pump and dump. And now the true value of oil is coming into play. As you guys can see, gas prices are rising. Gas prices, they rose last year and then they dropped, and it was exciting. And Biden was like promising some great things and all this stuff. But now oil dropped down below 80, which to me, I think it's a great buy now, because the stability of it and the way that it should trend should have a proper structure. The proper structure should look something like this, right? So you want to look for that staircase pattern, to go all the way back up. That's kind of what I'm looking for in oil. A lot of the oil tickers like XOM, APA, Oxy, CVX, and I don't know what else. They're all basically very, very high, and you need to drop just a bit more in order for oil to start trending back up and to give that push into all these other oil names. And then we can see a nice steady uptrend back into even 100 or 110. But for now, above 80, I would be targeting 90, right? Take it very, very slow. There's a lot of stuff going on with oil, and it's a lot more to explain, which I'm not going to dig in deeper. It's totally up to you guys to go and understand what's happening with oil and everything else across the globe. So this is where it takes your part. But understand here, though, the fact that it's stabilizing and it's accumulating now versus like this whole huge move shows a good sign of a potential reversal back up. Okay, how high can it go? I don't know, and honestly, it doesn't really matter as long as we catch the reversals on some of these oil names, right? That's the big thing. It's understanding the why. Okay. So let's look at the dollar now. Okay. If you guys have been following me for quite a while, you guys will know that right here, I said that we were going to top out on dollar. The dollar created this little supply here on the 4-hour. When that happened, I put in the yellow box and I haven't taken it off. What I said here is that this is going to probably drop back down into these levels here. Okay. We still have a little more room to drop and a little more to pull back, right? So this is the level that I was talking about down here. And then this is the other level. Okay. What's going on with the dollar? Again, it's the same thing with everything else. Stabilization. Stabilization means accumulation. Once the accumulation happens in the markets, then we'll see where things are really going, right? Bigger picture. Right now, the dollar has been dropping ever since I drew this yellow box. Again, if you guys have been following me, you guys should know already that the dollar I mentioned up here, you guys go back and look at that video, maybe around October. I would say around October last year, I made the video, so you guys go find it. It's definitely on there, right? So anyways, now that the dollar's chilling down here, I'm going to wait now for a little stabilization and see if this is even going to keep on trending back up. You guys can see I have my alert right here at this, what is this, 104.5 and then 105.6, which right now it just showed a nice bounce here just for that pullback for more downside. Again, these bigger movements with oil, VIX, and the dollar, a lot of the reaction is already done. Okay, so when that's done, now you got to look for the proper structure for these to move in their own directions. So you're no longer going to get the how would you say, the inverse of each other. Just because one's green doesn't mean one's going to be red. Just because one's red doesn't mean that the other one's going to be green. Okay, all that is done, guys. Okay, now we look for stabilization, accumulation, and true value for a stock, a name, to find the proper direction of where it should go in the next few weeks, few months, few days, few minutes, whatever it may be. Okay, so I want to point that out and make that very, very clear. Also want to point out financials. Financials have been doing really, really good ever since the last year. The huge drop, it's been reversing a lot of the names, JPM, BACC. They've all been reversing, and right now financials are kind of like cooling off right now. They're still finding some accumulation, as you can see here. This is big wicks here from the top side from that 37. But nonetheless, we are over the bigger accumulation that happened. So this is the bigger accumulation, and we're finally right above it. And now we're just finding some structure and more patterns in order for this to break above. But either way, financials are still doing great. I think they benefited the most out of everything economically wise. But again, that's just my opinion. Let's go check out XLE. This is the energy. The energy is still kind of chilling up there again, kind of waiting for a little bit more direction from oil in order for this to either drop back down or push back up into these highs of 101.50. It's a crazy number. It's a crazy trend. So this thing is still trending in general, right? Take a look at XLP as well. This one's been a little struggling just a little bit more, but it's either way, we're still kind of holding it. So I'm just looking for some strength here in order for the market to push back up. Jets, same thing. Airlines is like the number one thing that I've always been watching because they have a lot of great rewards. Okay, the risk is very minimal, and the fact that we never stayed below 17, we did for a little bit. We came back up, kind of just holding this consolidation right here. And now that we broke this trend line and we're retesting here, in the next couple of weeks, we'll decide if this is going to stay bullish or not. Airlines have been the worst sector to get hit the most, ever since COVID happened. And it's been a very, very long time since those have fully reversed. And it's probably going to take a little while longer too. But, just in general, I think it's still a great reward versus risk. But yeah, I mean, other than that, guys, like, keep trading the way that this market is going. It's be cautious that we're up in these levels, but be happy that things are finally reversing and looking good, and also that the VIX is down. The fact that oil and the dollar don't move with the market in sync anymore, it's a good thing. Remember, the catalysts are all done. Now we're just going to deal with this, the intraday and short-term fears that we're going to get. Until that changes, I will personally still be on the call side and be trading those puts as long as they pull back, be trading those and be buying those dips and keep on going like that with the market. There's still a lot of strength in the market. Don't get me wrong. Like I said, be cautious 100% and be aware of what's going on with everything and how things are moving in general. So hopefully this helps you guys understand a little bit more of what the market is and how it's moving, why it's moving, and pay attention to the bigger time frames, guys. Pay attention to the way that things happened in the past that can potentially change in the future. Now, like I said, everything happened in the past with the reactions, the volatility, the fears of recessions. Basically, a lot of it's done. And now we're just kind of short-term news headlines, recession and increase of rates and all these things. Those are just minor things, okay? Again, do your own due diligence, understand on your own perspective, and don't take me for my word, but just keep following those charts and understand, right? But anyways, a lot of names are looking good, guys. Google looks amazing right now. PayPal looks great as well. I think the other one is Disney. Disney right here, that nice little base that is created is looking amazing as well. A lot of good names. This next one is CVX. I'm actually looking to get into the CVX, maybe puts, maybe calls. I don't know. Whatever the end of the day brings. You can see this is the last demand, which is the 178. If this doesn't hold today and it drops, closes below 160, I'm probably going to play a put on CVX. But otherwise, I'm kind of just waiting for the call side to hold 168. Or I might just wait until tomorrow, depending on where you guys are watching this video. I would be looking for a nice drop back down into about 165 area, as low as like 162, even potentially 160, to be honest. This is a big demand for CVX. And if oil is looking good, if oil can just hold here and not give me any more red candles and just push all the way into 80 or 81, then we should be looking good for calls versus puts. So it's just a big decision that I have to make towards the end of the day. And if I'm indecisive, I won't take it. If I'm 100% sure of my position, then for sure I will take it, but I'm definitely going to be patient enough to allow this to develop right here and to allow buyers to step in or sellers to take over, whichever one. And then once we're right below 168 and that pressure comes in up or down, I am taking this trade, either 170 calls or 165 puts, right? Plain and simple. Just got to be patient enough to wait for that position, right? But yeah, other than that, guys, do some due diligence, please, in the markets. For right now, things are still looking good. We're still in this nice little range right here from this like 40, 80 to about 42, I guess. And there's no actual breakout just yet, but the trend in itself is still holding. Until that breaks, keep buying those dips and keep trading this trend to the upside. Okay, don't go against it because right now it's still not bearish at all. All right, you guys have a good one, and I'll see you on the next one.